I'm Jan Arsenault, and I lead the team that produces our quarterly newsletter, Market Point. When I look at 2021, I can't emphasize enough how resilient economies have been in adjusting and adapting to the pandemic. Throughout the year, the rollout of vaccines led to improved mobility, while individuals and businesses found new and creative ways to live with COVID-19. And to facilitate the recovery, plenty of fiscal and monetary stimulus was provided last year, here in the US and internationally as well. As a result, bonds lagged in 2021 as interest rates ended the year higher than they started. Strong economic growth and high inflation prints throughout the year caught many bond investors by surprise. On the other end, growth assets like equities had a fantastic year. All year earnings were a strong catalyst for equity markets as companies had no problem passing along higher wage and input costs to consumers. As shown on the chart here, stocks have historically performed well during inflationary periods. Stocks remain our favorite asset class for 2022 as we expect inflation to remain relatively high, especially in the first half of the year. As we look ahead to 2022, we expect economic growth to remain above trend as the reopening process continues, and labor and supply shortages, which in 2021 prevented many companies from meeting strong consumer demand, slowly get resolved. From a portfolio positioning standpoint, as I just mentioned, we tactically continue to favor equities over bonds. Within equities, our preference remains with value sectors like financials and industrials, as we believe the more economically sensitive and cyclical sectors of the economy will do quite well in 2022. On the other hand, our biggest underweight sector remains technology, which we believe will be under pressure from rising interest rates and increased regulation this year. Within fixed income, corporate credit and inflation protection remain two important components of our clients' bond allocation. Both areas provided strong outperformance in 2021, and we think more gains are likely in 2022. We are also maintaining a short duration call in bond portfolios in expectations of higher long-term yields in 2022. As always, our clients' portfolios continue to reflect our best ideas, and we will remain flexible all year to adapt to changing information and market conditions. Thank you for listening, and I certainly hope you enjoy reading our newsletter, Market Point. Please click the link in this email for a more complete review of our thoughts and insights. For additional articles, newsletters, and more, make sure to follow us on Facebook, LinkedIn, and TrustPointinc.com. Thank you.